Godrej Consumer Products has reported a 1.4% dip in consolidated net profit to over 420 crores in the third quarter ended December 2018. Q3 earnings bring out pricing-led growth but weak volume growth on a high base. International business, on the other hand, witnessed a sharp margin erosion as well. Let's do a three-point analysis of the results, fine print. 1. What are the key positives in Q3 earnings? Godrej Consumer has reported a comparable constant currency growth of 8% aided by a 10% growth in international business and 6% for the India business. While India business benefited from pricing effect, cost-saving initiatives also helped in EBITDA margin expansion of 140 basis points year-on-year. 2. What remain as big concerns for the company? In terms of volume growth, which is the key metric for FMCG companies, Indian business performance was disappointing. Volumes grew by just 1%, but it came on a base of 18%. In a 2-year compounded annual growth rate, volume growth is 10%. Soaps and hair color segment witnessed flat to moderate growth, and among key concerns for the investors are its household insecticide segment, which constitute about 38% of India's sales, continued to see stagnant performance. Now further, international business was weighed by both crude oil and currency depreciation. 3. What's the outlook on the company going forward? Sales growth was guided by pricing effect. However, pricing effect is expected to taper in the near term. Volume growth should rebound in Q4 as the base effect is favorable. Further, on account of better crude oil pricing, the company is hopeful of margin improvement as well. Demand conditions remain stable. And as far as the stock is concerned, it has consolidated from its recent highs. Currently, it trades at 36 times FY20 estimate earnings, which is about 8 to 10% discount to the likes of Marico and Dabur. The company also has relatively higher exposure to international markets, as about 50% of sales come from international business, wherein the growth visibility and earning stability are lower than Indian domestic market. Hence, investors must stay on the sidelines.